Good morning, welcome to IG Market News. I'm Brenda Kelly. Today is the 7th of August 2013. Today was a new departure from the norm for the Bank of England, where we got some forward guidance from the new Bank of England Governor, Mark Carney. The initial reaction in the currency markets was to see sterling push that bit lower against the US dollar, testing that 152 level before driving much higher. What we've looked at here is the daily chart, and we put Fibonacci levels on it from the highs that we saw in mid-June of this year, which were around 157.52, to the lows that we saw just last month around 148.24. The push through the downtrend line and the 61.8% retracement off that level is quite a bullish signal for the actual pound. And ahead of this, what we have is the 200-day moving average, which comes in around the 155.36 level. This could be a target for the cable pair at the moment. And of course, if we see a move through that 200-day moving average, we could execute a complete retracement of this entire down move and get back up to those 157 levels. Again, what was interesting about the data today, and of course the guidance from Mr. Carney, in light of all the decent economic data we've seen for the UK over the last number of days, is that it is exceptionally dovish, but with a caveat. He has said that if we see unemployment reach 7%, only then will they actually consider raising interest rates, and even at that particular point, we cannot expect an automatic rate hike. As well as that, he is expecting to see inflation fall back within the next couple of years, bearing in mind that the inflation target is 2%, and we haven't seen that particular target in about 2 or 3 years at this particular point, and inflation now stands at 2.9%. So it seems that there is a departure from any particular mandate in respect of inflation, and there seems to be a lack of concern surrounding that. Nonetheless, we did see growth expectations upgraded for this year and of course next year, which I think is probably the reason we're seeing such a strong sterling versus the US dollar and of course against the euro. If we look at the bond market, there does seem to be a pricing in of interest rate hikes earlier than what Mr. Carney has alluded to. So it will be interesting to note whether this forward guidance is of any real importance, or if the market is going to pay attention to it once it digests the information. The Fibonacci is an interesting thing to use. Looking at this, you can see that the 61.8% retracement, now that it has been pushed through, should act as a support around that 154 level, and remaining above the 154.50 level does put a bias to the upside for sterling. Find a swing high and a swing low and find your levels within there. Obviously the retracements can provide support levels, and given that this recent development of the resistance of 154 and just above it has been breached, it should now turn into support. Currently our clients are 67% short, which was clearly a reaction to the initial reaction in the FX market, so we could expect to see a turnaround in this sentiment over the next few hours or days. For more information, please log on to IG.com.